Hi, I'm Roy from Financial Intake, and today we're diving into three intriguing stocks. We'll explore their breakout points and discuss strategies to protect your money if you're already invested. If you enjoy and find value in the content, don't forget to hit the like button and subscribe to the channel. Let's get started. We're starting with Micron stock. On the clean chart, with its 150-day moving average, we can see that this average has served as a strong line of resistance and support for the stock. Recently as support, and now as resistance. It's clear how the stock has attempted to break above this moving average several times, but has yet to succeed. At this point, we understand that $114 per share is crucial should the stock break through it. In this technical setup, I want to point out another pattern I see here, a double bottom. The stock is essentially bouncing between the two levels, indicating very strong support at $84. This suggests that there were likely preset buy orders at this price point. The stop loss can be placed at $84 for those with an active trade. If it falls below, I would consider exiting the trade. Now, let's talk about the breakout. We've established that the breakout level is 114, and once that happens, the next question is, what's the potential for this trade? I'm giving you so much value here and doing it with love. There's no way you're not hitting that like button and subscribing to the channel for even more incredible setups coming your way. All right, let's continue. As you can see in the setup on the chart, if we measure the depth of the cup, the potential target is $145, representing a 25% trade. But remember, this all depends on breaking through on $114. Now, let's move on to the stop loss. So we've identified the breakout level at $114. Once the breakout happens, the stop loss can be placed just below the breakout line at $113, or, for those with more patience, about 4% lower. This stock is consolidating before a potential move, and as always, we want to see buyers stepping in before the momentum builds. All right, let's move on to the following setup. Taking a broader view, we can observe the stock's highs and lows and see that AMD is consolidating. Historically, when this stock enters a consolidation phase, its subsequent movement, whether upward or downward, tends to be quite strong. In this chart, I've marked AMD's key support level at $132 to $82. This line has alternated between acting as support and resistance for the stock, and currently it serves as a strong support. For those invested in AMD today, the immediate takeaway is that if the stock breaks below this level, it's advisable to exit and wait until it climbs above. Now let's discuss the potential trade here. Since we're very close to the support level, one approach could be to set a stop loss at $132 and target the resistance level around $161. This creates a straightforward trade with a potential upside of about 16%. What's even more interesting about this stock is right here. Look at how it's been consolidating for an entire week, barely moving. These periods of tight consolidation often indicate that something significant is about to happen. It's a classic signal to stay alert for a potential breakout or breakdown. Here, I'm showing you a bullish triangle pattern that has broken out, another strong indicator that something positive is likely on the horizon. This breakout adds further confidence to the potential upward momentum we've been tracking. Having said all that, in this chart, I want to raise another possibility. There's a chance this could be a false breakout, and we might see one more leg down. If that happens, we already know the plan. Below $132, we're out. This level remains our clear signal to exit and wait for a better setup. First, let's look at Microsoft's performance compared to the S&P 500 since the beginning of the year. It's significantly underperformed. This suggests one of two scenarios. Either the stock continues to consolidate and trend downward through the end of the year, or, and this is the key point, we see a dramatic move upward, reclaiming its strength in the market. In my opinion, it's very critical. Look at the inverse head and shoulders pattern forming here, which typically signals a potential and significant downward move. How significant? Based on my calculations, a 20% drop is possible, taking the stock to around $320. That said, pay close attention to the support line. Staying below it means taking on significant risk. The critical level here is $407. I would stop at $400. If the stock falls below $400, there's no way I'd stay in the trade. For those who are big fans of the stock and want to feel more secure, I'd recommend waiting for a breakout above the $441.85 level. That's the point where the upward movement becomes more reliable for continued gains. That's it for today, friends. We've explored three exciting setups, how we can boost our returns, and just as importantly, how to protect our capital. If you found value in this video, please give it a like, subscribe to the channel, and let me know in the comments which stocks you'd like me to cover next. Until the next video, wishing you a green and profitable investing day.